Welcome to Around the House, sponsored by Romac Building Supply. I'm your host, Don Magruder. If you like today's show, go to aroundthehouse.tv to sign up for our YouTube channel or subscribe to our weekly newsletter. Today we're going to have a great show. Rob Warren from NRL Mortgage will be here, and he's going to discuss how you can secure a new mortgage. There are a ton of different ways of financing a home these days, and it's very complicated. Rob is a loan originator with NRL Mortgage, and he will take us through the process of securing a loan. So with that, I'd like to introduce Rob Warren from NRL Mortgage. Rob.
Hey, Don.
Good afternoon. How you doing?
Great. Thanks for having me.
First, take a few moments, Rob, and introduce yourself. Tell us about Rob and NRL Mortgage.
Okay. Well, Don, I was born and raised here in Lake County, a native of Umatilla, Florida, third generation. Born on a farm, family of beekeepers, so not used to sitting in an air-conditioned job, used to hard work, but I'm really enjoying what I do. I found NRL about a year ago after working for a bank for about 21 years as a bank manager and a loan officer. So I really found my calling with this type of a company because we're local, we can help the customers really find the products and explain them the ins and outs of the mortgage process.
Rob, where is your office located?
I'm in Tavares. We also have offices in Ocala and the Villages.
So you basically got the whole area covered.
Yes, absolutely.
So you can write mortgages throughout Lake, Sumter, and Marion County?
Anywhere in Florida, actually.
Okay. All right, so we're in the summer of 2019, and I got a question. Can homeowners get mortgages? Are they lending money these days? There seems to be a lot of turmoil. What's the landscape for borrowing money for homes these days?
Actually, I feel like it's gotten easier. There was such a pendulum swing after the crash. It feels like now it's loosened up. Guidelines they make sense now. There's a lot of documentation that's involved that some people may not be used to if they bought a home 10, 15 years ago. But as long as we explain them fully and let them know what to bring, why they're needing to bring that, what we're looking for, it's an easy process, and we are definitely lending money.
And I think you just said the correct word. It's a process.
Mm-hmm.
No one can skirt around the edges. You got to hit every mark and do every documentation. Well, let's talk about some of the base requirements.
Mm-hmm.
Say someone wanted a mortgage. First thing they're going to do is give you a call today at what number?
They can call me at 352-623-2176.
Okay, and they're looking to buy a house. I know
Mm-hmm.
there's pre-qualification letters and qualification letters. First off, what type of letters do you guys offer?
Well, typically a realtor will require a pre-qualification letter before they're going to show a home to a prospective buyer. That way it shows the seller this buyer is serious about buying a home. They're not just kicking tires, and they're able to buy that home. They have the ability.
But at that point, it's not full documentation. What do people generally have to provide to get a pre-qualification letter?
To do that, we will pull their credit. I will talk to them about what I see on their credit report, review their credit scores, and make sure everything on there sounds accurate and they're aware of it. You'd be surprised how many times we see collections and things people didn't even know they had.
Okay.
So after we do that, I'll talk about their income and look at their assets and talk about the much money they have for a down payment, and then we'll kind of decide which option might be best for them.
Do you generally, is it a good rule to overqualify someone? Or, for example, if someone called you and said, hey, Rob, I need a mortgage for $250,000, do you try to qualify from $300,000 just so they have that flexibility?
Well, generally what I'll do is we'll talk it through, and it's all about what the buyer wants and then what they're able to do. And I explain to them right away, listen, on paper, you may be able to afford $300,000. But what's important to me is what your budget calls for. If you're telling me that you feel more comfortable paying X amount of payment, I'll let you know you may be able to afford $500 more.
Yeah.
But I want you to stay where you're comfortable and what fits in your budget the best.
Big deals, documentation, what you bring. So say someone's called and they originally got that pre-qualification letter. Mm-hmm. They've gone out and visited a realtor and they found a home. Now here's the rubber meeting the road. Let's go through that process.
Mm-hmm.
What are you going to require for documentation to set up that mortgage?
A lot of it's going to depend on the type of income they have and type of assets they're using.
Okay.
Self-employed borrowers, for example, we're going to look for 2 years complete tax returns, business and personal. If it's a W-2 employee with regular pay stubs, those are much easier. Typically 2 years W-2s and most recent 30 days pay stubs.
So 2 years W-2 and 30 days pay stubs, okay. So you're verifying income.
Yep.
What else are you going to require?
It's 60 days worth of assets, usually checking and savings accounts. That may also come to like IRA accounts if they're using that for income or we're using that for reserves.
What about things like 401k accounts and other properties, cars and stuff? Do you have to account for all that too?
We don't look into like their cars and their physical assets like that, but we do occasionally look for their 401ks and their IRAs and retirement accounts and stocks and bonds if we need them for assets.
Okay, so then what else are they supposed to bring?
Typically, really just the income and assets, and then there'll be some letters of explanation. We'll have them explain possibly their address variances on their credit reports, name variations, things like that.
Okay. You guys also require a bona fide contract on the property too at that point, don't you?
Correct, yes.
Most mortgage companies requiring inspections and appraisals and surveys in the process.
Well, we don't require a home inspection. I do highly recommend one. That's really for the buyer to protect themselves. We will do an appraisal, and during that appraisal, the appraiser will look for any health and safety issues, and then they'll notate that on the appraisal if anything doesn't meet standards of that particular loan program, such as FHA or VA or conventional. Those have different guidelines, and they may look a little deeper as far as health and safety issues. Surveys are typically required so that we can get the correct endorsements from the title company.
Rob, from the first call to get that pre-qualification letter to picking a home to that final day in which they're able to buy the home, what type of time period are we looking at these days?
Well, people think it's longer than it is, but we can make it happen usually within about 21 to 25 days, but the typical is about 30 days.
So it's solid 30 days. Do you find people get frustrated during the process?
Sometimes, but not if you explain right and they understand why you're asking for the things. One of the things that sets me apart from some of the other lenders is what I do is I prepare them by letting them know what I'm going to ask for. I get everything I can up front so that there's no surprises down the road.
All right, we're going to soon start talking about the various mortgage programs, but the first thing I want to talk about is terminology, PMI. That's a big deal in mortgages, and a lot of people don't understand. Can you tell us what PMI stands for and what is PMI?
Yeah, absolutely. PMI is private mortgage insurance. And what that is basically it's an insurance policy to protect the lender and the investor. It's required typically on loans when you don't put 20% down. And it's really just there in case you default on the loan, that lender is protected in the event they have to sell the home and don't recover the full amount of their investment.
So, for example, if someone's got a home and they're not putting a big down payment on it, more than likely they're going to have private mortgage insurance, PMI, and that's going to cost. It could cost them $125 a month. I understand.
Could be even more.
Even more. It depends. It's a valuation thing, isn't it?
It depends on the program. FHA, for example, may be a more expensive PMI than a conventional loan, and also some of them are risk-based as well. So the higher the credit score, the better debt-to-income ratio, the lower the price.
But I understand if you reach like 20% value, actual value in your home, you can possibly get PMI taken off. Is that true?
That's correct, except on an FHA loan. On a conventional loan, that is correct. You can request an appraisal and have that looked at to be removed.
And you hear the terminology buying down points. I know that's not as common these days, but what's buying down points? Buying
down points should be more common for people who are planning on staying in the home for a while. What a lot of people don't know is a point is a percent of the loan amount. So an example, a $100,000 loan, a point is $1,000.
Yeah.
And how the rates work, let's say today the rate is, let's just say 4.5%. At par, meaning with no points. If you're telling me you're going to live in that home the rest of your life for 30 years, 20 years, we may talk about buying that rate down. And what we could do in that case is maybe pay a point and get that rate from 4.5 down to 4. And what you would be doing in a sense is buying a better rate.
What's the general length of most mortgages in the area, and what's the general range on interest rates as we go into the summer of 2019?
Most of the mortgages we see are typically 30-year loans. We do also offer 10, 15, 20, and 25. But 30 is what most people look at because they know they can always pay extra to their principal, pay it off early if they need to. But if they have a tight month or get strapped, they don't have to pay that larger payment of, say, a 10-year mortgage. Rates currently are running still in the mid to upper 4s. Haven't seen a whole lot of movement recently and are not expected to see any anytime real soon that we know of.
I'd like to talk about some various financing programs. We've got just a few minutes. USDA. Tell us about that one.
USDA is a nice program for people who don't want to put any money down. It's a 100% financing program. There are limitations as far as where you can buy. We have to look up the maps on the USDA site and just see what areas are.
Yeah, it used to be all of Lake and Sumter County. Now they've
pockets.
Now it's pockets.
Yep.
So great affordable housing program. And I take it NRL Mortgage handles that?
Yes, sir. Absolutely. Yep.
Okay. FHA. Do you handle FHA? What is that?
Definitely. FHA is a very popular program because it's so flexible. FHA will allow the borrower typically to use more of their income than the other programs. So it has a higher income to debt ratio allowance, and even with exceptions, you can go higher in some cases with a low down payment of 3.5%.
So it's easier to get an FHA. It's 3.5%, but you have to pay PMI, right?
Correct.
Now, as PMI, once you hit that 20% threshold, it doesn't come away, does it?
Not an FHA, no. They can refinance that home down the road to a conventional loan to get that off.
How hard is it to get an FHA loan?
Really, it all depends on the borrower. We look at their income to debt ratio, we look at their credit, and we look at their assets. If those fit into the guidelines, it's really not a hard program at all to get.
Rob, we got a lot of veterans here. Do you guys do VA loans?
Yes, we do, a lot of them.
And how does those work?
Veteran loans are to really reward our veterans for their service, and they have no money down, 100% financing, and no PMI.
No PMI.
Correct.
So if you're a veteran, that's the gold standard, I guess.
Absolutely. Yep.
Very hard to apply for a VA loan?
No, not at all. It works just like the other loan programs. The misconception, people think it's a harder loan to get and harder to get the home to go through inspections, but really we haven't seen that to be the case.
Now, do you do private mortgages also?
We do some brokered type loans that are kind of unique programs. They're called non-QM loans. We have ability to do those programs as well.
Someone's listening today. How do they determine, do they do USDA, FHA, VA, or a base loan through a bank? How do you make that decision? What should be the driving factors?
Well, a lot of that factor would be education. Let's find out how much you can afford, first of all. Is putting 3.5% down going to strap you, or is it going to make it where you can't afford to make your car payment next month? You want to make sure that which program fits them best, and that my best advice would be to talk to the loan officer and just kind of lay down some options. We'll show them the difference between FHA, conventional, and USDA, just to let them choose what option might fit their budget better, and we can kind of give them the ins and outs of why one might fit better than the other.
But the first step, and we'll circle back, is this pre-qualification letter. And you say it's fairly easy to get.
Yes, typically over the phone, someone will call
me.
me.
So over the phone, they can call you.
Yep.
How long does it take to get a pre-qualification letter?
Generally, I can knock one out within under an hour.
Okay. What's the biggest mistake people are making when they select a mortgage company or get a mortgage? What's the biggest mistake people are making?
What I've seen the biggest mistake lately would be not reading the small print. So many loan officers or loan companies now are advertising online, and they throw out this beautifully low rate, and they entice the borrowers to call them and get that loan going. What they don't read is the small print. And there's one, for example, a big company I've seen online several times, really low rates advertised. But if you scroll down to see that small print, it says with 25% down payment, 2.125 points charged. And the borrower, by that time, they may not see that. They may already be in process getting a pre-qual, have their contract in hand, and not even know what they're getting into. So education's big.
Well, Rob Bourne from NRL Mortgage, thank you for being our guest.
Thanks for having me.
And I want to thank you for watching Around the House today. And be sure to go to aroundthehouse.tv to sign up for our YouTube channel and subscribe to our weekly newsletter. Until next time, we will see you around the house.